Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked on February the 10th, 2020, and we are here with the Forex Market Daily Analysis for you. And real quick, we just want to show you our disclaimer to remind you that this is for illustrative purposes only. And with that, we're going to jump to our live screen here at forex-trading-unlocked.com. We've already clicked on the workstation page. We're going to toggle down through the economic calendar and go to the chart we have pulled up already. As you can see, the euro US dollar is now laying on support, pushing newer move lows again today. It started off the session on Sunday night being a little bit positive, and it looked like the bulls wanted to take a little run at it and get a little reprieve from the current bearish trend that the euro US dollar has been in now for over a month. In fact, now it's pushing a month and a half. Today with newer move lows, and right now we're a little bit off them, trading at 109.18. So the key question is what is going on here? Well, we had a head and shoulders up here, and we had reached the target already on Friday's session, and now we have pummeled below the head and shoulders target extreme, which makes you wonder how far are we going to go. Now we can see that the overall trend had been higher going up into the end of 2019 and 2020. This market is a bear, so we have a 1, 2, 3, 4, 5 wave down to our target from the head and shoulders, and as you can see, we have 3 pivots here. We have the last swing, lower swing high here at 109.33. This is our upside directional. Anything above here would have us in a neutral to higher posture, definitely looking for a challenge of 112.42 before we could even remotely say that this market, the sleeping bull market that had been the euro US dollar for a while, would be continuing. However, I think that due to fundamentals and technicals, there are reasons to believe that the euro US dollar is going to remain under pressure for the next few months at least. Right now, as far as the technicals for just the currency cross itself, or for the forex market dynamics, the dollar strength is one of the very fundamental variables that is weighing on the euro. Then we have the coronavirus, obviously, which is definitely impacting the whole globe and is impacting the euro US dollar as well. And then we also have the issues that are going on in the EU that are giving a little bit of weight towards the bearish perspective for the euro. So right now we're looking at a sell rally forecast, and right now, as today, we made lower move lows. I would say for trading opportunities, if you're not in or you're an aggressive short, no matter what, as long as you are below 109.90, you're okay. If we get a rally above here, this is kind of a critical pivot on a monthly basis. Trading above here keeps this market neutral. It doesn't mean that it's bullish. Now, if we were to get a breach of this 109.33 here and make higher move highs, that's a whole new different story, not to mention getting us back into that strong consolidated base for the euro US dollar. Remember that the euro US dollar now, for quite some time, every time it breaks down into this territory below 110 down into the 109 handle, that it starts to find support, usually between 109.5 and 108.5. And then no matter what's going on in the world, it seems that the euro is able to get, the euro US dollar, that is able to get a bounce. So right now we're bearish to euro US dollar. Only a breach of 109.33, 110.93 would have us bullish, targeting higher new highs. Anything below there definitely keeps us in a sell rally forecast. Kind of a wide range from the way the chart looks, but if you really look at the true distance, it's really not that much because the euro US dollar is traded in such a tight range for so long now. Now we're going to look at the British pound US dollar, the other big weight in the dollar index. So we know that the slide in the euro US dollar is helping to lift the dollar for sure against the broad market of currencies. The pound US dollar, however, seems to be pretty neutral. It made a lower move low today, but now it's trading just above this pivot. See here, we had this last low here. This was one of the higher move lows, keeping this trend intact. Now, this doesn't mean that the overall bull trend is over. It just means that right now we're definitely keeping this consolidation of sideways trading. If we fail from this pivot here at 127.62, taking out this last higher move low, that would be a very bearish indication that this pound US dollar trade is definitely no longer in a corrective sideways corrective phase, but is definitely becoming bearish. We do have, remember, this was our last higher swing low, then we made a lower swing high, and then, excuse me here, let's keep this chart here. So right here was our last higher move low, supporting the upward trend. Then we had this higher swing high here beforehand. That was our top. So this became a lower swing high, followed by a higher swing low, which kept it in this really sideways pattern into Brexit. Then recently we had this little pop here. We made a lower move high, and now we made a lower move low. So here you can look at it from this high. We have the low, we have a lower move high, and now we have made a lower move low. So that right in itself is neutral to bearish the pound US dollar. I think that obviously the coronavirus would be one of the biggest weights on this one. Remember also that we have the trade deal between the UK that needs to be made with the US, just like the US and the EU have a trade deal to make. Since we're looking at the US or the US dollar versus the European currencies, here's an interesting trade. The Swiss franc has been a bull versus most currencies now for quite some time. Recently, we have been under pressure with the dollar, but not quite as much as the other currencies. It just basically set a base. What we do have here is a reverse head and shoulders that has formed. You can see the shoulder here, the head here when we made this low a couple of weeks ago, and then we have the shoulder here, which was this last low right here that was made a couple of weeks ago, week and a half ago. So this middle of January move here looks like that set a nice bottom. We made a series of, we made a higher move high, we made a higher move low. Now we're making a higher move high right here as we speak, and we've taken out, we're settling right now, we are trading above this neckline. So our upside target, if we settle, especially if we close positive for the US dollar Swiss today, on a longer term for probably just the next like 3 to, I would say, 10 sessions, somewhere in there. This upside target is where we're looking for the next week and a half or so. This is a big deal with the US dollar gaining strength against the Swiss like this. It had been holding kind of just basing, but it looks like the dollar index wants to drive the US dollar higher versus most of your major crosses still. And as long as that momentum is there, it's a very vertical slope, but it seems to be in place. So you don't, when the trend is your friend, and right now we have an upside breakout. So we're in a buy dip forecast for the US dollar Swiss. Now we're still a bull for the Swiss versus most currencies, but I think versus the dollar we still have a chance to grind our way up to 99.16. Now I think it's going to be a grind. I don't think it's going to be something very excessive. And then about once we get, if we do reach this target area, expect a lot of resistance, because the parity dance is something that the US dollar has had trouble with when things were better. Now we have this coronavirus. It's obviously coming into play, but I don't think that that's something that could hold it above parity. I think it might get us to pressure it. Definitely this 99.16 upside target. All right, now we're going to go and jump over to North America, because we have the new trade agreement between the US, Canada, and Mexico. So the Canadians still have to finalize a couple things, but otherwise it looks like this deal is in place. We have a breakout to the upside trying to emerge today. Now this is a big deal. This market has been a slow grinding bear for a while. Look at this. This trend has been excessive since January started, and it just keeps on going. It's a very steep slope. This market now, as we inch to take out this last lower move high, takes us off the very bearish trend, and now has us at least neutral. So does that mean that this is going to keep on exploding to the upside or something like that over the next few sessions? That anything can happen, but the slope is pretty steep. So we're looking for at least it to start to consolidate, maybe have a little bit of a pullback. But as long as this dollar index continues to gain momentum, and it's probably because of the coronavirus, I would say we'll wait for an opportunity to buy into this, because this is a grind higher. You can see the ranges aren't that big, so we'll probably have something like what happened here when we pop through here, making higher move highs, have a big day that tries to reverse it, and then it reverses back again. So I think we're gearing up for a profit taking move, but right now, like I said, the dollar index bull doesn't seem like it wants to run out of gas. So right now we have another currency besides we have the euro, we have the Swiss, and now we have the Canadian dollar, all showing strength versus the US dollar. The British pound being the only one that's not quite showing that today. And now we have the US dollar Mexican peso. This is such an indecisive trade. This is in a bear market. No matter what the dollar index seems to be doing, what's going on in the world, it seems like the peso is gaining strength on the US dollar. We've made a series of lower move lows and lower move highs, so we're going to use this pivot right here at this last swing high at 1894 pesos as our breakout level. Anything below here, we are in a sell rally forecast looking for a test of this 1855 area. And that's about all we have to say about the peso. So now we're going to go and take out, look at the Japanese yen. So the Japanese yen has been in a very wild swing trade for the last month and a half. I mean, I have to say, of all the currencies, if there's one that's had some action, it's the US dollar yen. Now, this has been a bull for months and has made it coming off a higher move high. We set a higher move low now, and now we're just hovering below this 110.31 area. I believe that we're most likely going to get a challenge of this in the not too distant future. A breach of 110.31 has us targeting 112 to 112.5. So there's quite a move to the upside that we're looking. Even if the dollar index starts to have a reprieve and start to correct against the current rally, which profit-taking move for a couple days or so wouldn't be a bad idea on a technical aspect, but right now the fundamentals aren't looking that way. But the fundamental for the US dollar yen is that it's a bull to begin with. So no matter what, we're looking for a challenge of resistance. Only a failure from 108.28 here would have us selling into this market. So if you want to be an aggressive bear right now and think that this is going to consolidate more, or maybe it is going to turn, then I would say you can sell against this 110.31 area. Anything above here, I believe, would be pretty foolish to be short. AUD, let's take a look at what's going on here. So now all of these trades we've been looking at so far today, because of the volatility that's kind of dropped a little bit and the way things are trending, you have a lot of opportunities, I think, with futures options, Forex, outright cash products, as well as a couple other things. There's a couple binary options trades that are on the table as the week begins. But just remember that the coronavirus seems to be the most fundamental variable. Now we have some inflation numbers that have been inkling and sticking out in China that could be good for the Australian dollar in the short run. However, with the other fundamental variables between the wildfire, the coronavirus, and everything else, I think you're still just in a sell rally forecast for the Australian dollar, US dollar. So as you can see, we were higher earlier in the session. We're still higher on the day, but as a whole, we're trading at the bottom of the range and hovering just below or above the lows, new move lows set on Friday. I'd be a very cautious bull. If you're a bull here, I would say use buy against yesterday's or Friday's low at 6661. Any failure from there, I think you're going to be in a world of hurt. This trend is very aggressive. I would be very, very leery of trying to catch a falling knife here. Now we also have the New Zealand dollar, US dollar we want to take a look at. This is also in the Asiatic trade zone. As you can see, it's falling apart. It's hard pressed on its lows right now. That sort of caramel color brown pivot here at 64.37. This keeps our direction bearish. Anything below here keeps this market in a world of hurt. Only if we get a rally above 65.06 takes us off that area. So right now it's a sell rally forecast, and I think you can be a bear against 64.37 all day long right now, as long as the dollar index remains to be a bear as the week starts to begin. And we will now look at another interesting breakout to the upside that has been something we've been looking at. The Turkish lira versus the dollar has spiked high on Friday, and as you can see today, we took out the low, but we're hovering above this caramel pivot here at 597.9. Anything above here keeps this market pressing higher move highs as the US TRY bull just continues its rampage further. This one, I believe, is definitely a buy dip scenario situation. Any correction right now, I believe, should be a correction for just it will be a technical and fundamental slide. I believe the US dollar TRY is a long-term bull no matter what goes on for the next 3 to 6 months, just because it's where it's located in the world and the way things are going between the coronavirus and other things, and the way trade has been is now being forecasted to slow down over the next 6 months to 12 months as we head into 2020, which is definitely starting out and shaping up to be one interesting year. At least though this week we have a little bit more of open trade. Remember that we are no longer plagued with the politics that's been going on between Brexit, let alone, I mean, we still have the trade deals that have to go through, but the U.S. presidential impeachment hearings are done. Now we are just focusing on the normal geopolitical noise, which is kind of interesting. It's I think our first week of 2020 that we can actually do that, at least as far as that kind of area goes. So with that being said, we're going to go back to the euro US dollar and see how that is. So we see that the dollar right now as a whole is gaining against most currencies, except for the Mexican peso. For some reason, the US dollar Mexican peso is just a bear. Is what it is. Who knew, you know? So right now we don't have any real signals except for that one head and shoulder breakout in the US dollar Swiss. So this goes, and let's take a look at this one for you. We'll go to the euro Swiss right here. You can see this, the euro is weak versus the Swiss as well. So as long as this is the case, I think you're going to have to look at the euro Swiss, or the euro, excuse me, as being a very aggressive bear looking to grind its lows. Now, I'd be cautious on your expectations. So being short, we're not looking for a long-term big-time break. Now, over the next 6 months, absolutely, if this market stays a bear, we could see the euro US dollar actually touch down at parity where it has not been in a very, very long time. But let's not get ahead of ourselves and want to see how the coronavirus still manifests itself. And that would really only start to impact us, I think, if it really starts to spread throughout Europe and the United States like it has in China. As long as things are contained and maintained just to China for the most part, I believe we're going to start to see a stabilization, and the flight to quality going on in the euro US dollar is going to subside. And just from that alone, you're probably going to get a little bit of a buying lift in the euro US dollar coming up. So let's key off of those fundamentals for the next few days and pay close attention to them. Otherwise, we'll watch these pivots that we have here. They're really not that wide. It just looks wide on this chart because the average range, I mean, even today we're making new lows. Let's see, the low here is, today the low was 109.09 and the high is 109.57. So we have less than a 50 pip range while we're making newer move lows. So that gives you an idea of the volatility. It is tight. Keep your rational expectations in place and you'll probably do all right. With that being said, I want to thank you very much. Please subscribe to our YouTube channel so you know when we are streaming these videos live or when we upload lessons, and also come to www.forex-trading-unlocked.com to get all your Forex trading needs answered. And with that, we're going to go back to our logo. Thank you very much. You have a good day.